What if I told you that the stock market, once called uninvestable, is now suddenly in fashion? I'm talking about China's $19 trillion stock market, which global investors abandoned just 3 years ago. Now, the very same market is luring them back in. So what changed? First, the AI and tech wave. China's progress in artificial intelligence, semiconductors, and even innovative drugs has sent a strong signal. The US export bans and trade war did not stop the world's second biggest economy from innovating. In fact, companies like DeepSeek, the AI model rivaling ChatGPT, have triggered a revaluation of Chinese innovation. Second, the policy backdrop. A US-China tariff truce plus China's domestic monetary easing have boosted confidence. The result? The Shanghai Composite just hit a decade high while Hong Kong stocks touched a 4-year high. And here's the kicker. Foreign investors aren't just watching from the sidelines anymore. Hedge funds and global asset managers are quietly moving money back in. August even saw the biggest monthly buying of Chinese stocks by global hedge funds in 6 months, according to Morgan Stanley. Data backs this up. New emerging markets ex-China funds have collapsed. Only 8 were launched this year compared to 21 last year. In other words, global demand for EM without China has cooled. Now China is being treated as a standalone asset class you simply cannot ignore. And the anecdotal evidence? It is piling up. London's Polar Capital flipped from underweight China to overweight, raising allocations above 30%. China conference went from half empty in 2023 to a packed house in 2025. Cambridge Associates says they've received 30 client requests this year for China funds, a huge jump from almost none in 2023. Investors are even booking trips back to Beijing, Shanghai and Hong Kong, many for the first time since COVID. But here's the twist. China's economy still has deep cracks. Industrial output and retail sales are weak. Foreign direct investment is down 13% this year. Deflationary pressure looms large, and while AI and biotech are booming, analysts warn the rally will not last unless the broader economy catches up. So right now, we are in what Alliance calls a re-rating phase. Foreign money hasn't rushed in, but it is standing at the door, seriously considering stepping back inside. The big question: is this just a tactical rebound or the beginning of China's long-term comeback story in global markets? What do you think? Would you bet on China again?
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Thank you for watching CNBC TV 18. For all top headlines and updates, follow us on our social media platforms.